gold clearly had a banner year. People think we're at peak gold. It's probably too expensive. And these gold guys from Switzerland are just selling their book. I get it. But it couldn't be further from the truth objectively. Again, get past, if you can, my bias and look at the numbers yourselves. Figure this out or examine it on your own, especially if you're thinking about gold as a preservation asset, not as a trade. If you're trying to get rich quick, going long or short, precious metals, good luck, especially with the forces against you. That's a very different mindset than trying to stay wealthy or not get poorer by this melting ice cube of paper money. Frankly, Trump wants gold to go higher. Besant wants to go higher, and we'll talk about that. But again, the gold price isn't becoming higher. It's the paper money beneath it that's getting weaker.
Investors are waking up to a historic reality. As of April 2026, gold and silver are shattering records, with gold hitting unprecedented highs above $4,500 per ounce and silver entering a volatile price discovery phase targeting $65 and beyond. While some fear we've reached peak gold, the underlying drivers, from global central banks aggressively diversifying away from the US dollar to a structural silver supply deficit now in its fifth consecutive year, suggest the floor is rising. With geopolitical tensions in the Middle East and shifting Federal Reserve leadership creating a whiplash effect in the paper markets, the urgency to understand the difference between price and value has never been greater. Our featured speaker is Matthew Piepenburg, partner at Von Greyers and a leading voice in macro analysis. In this discussion, Piepenburg challenges the peak gold narrative, arguing that the recent price surge isn't about gold becoming more expensive, but about the melting ice cube of paper money losing its purchasing power. He urges viewers to move past the get-rich-quick trading mindset and instead view precious metals as the ultimate preservation asset against a dying fiat system. Now, we present the clips from his interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
When you talk about the gold price in US dollar terms, or certainly in euro terms, but all-time highs, we had 55 all-time highs in US dollar terms in 2025. I think it was up 60% against an S&P at 17%. I mean, gold clearly had a banner year. People think we're at peak gold. It's probably too expensive. And these gold guys from Switzerland are just selling their book. I get it. But it couldn't be further from the truth objectively. Again, get past, if you can, my bias and look at the numbers yourselves. Figure this out or examine it on your own, especially if you're thinking about gold as a preservation asset, not as a trade. If you're trying to get rich quick, going long or short, precious metals, good luck, especially with the forces against you. That's a very different mindset than trying to stay wealthy or not get poorer by this melting ice cube of paper money. But the key thesis that we've been talking about at Von Greyers, and I've been writing about for years, is that gold is not actually rising. What is not astounding is not that gold went from 2,500 to 5,500 in a very short amount of time. It's not that gold is rising. It's, again, the dollar from our debt discussion is falling. You have to understand, or people need to consider, that U.S. money supply, M2 money supply, during COVID went from 15 trillion to 21 trillion in a couple of years. It's like a 40% increase in a couple of years. And then after that went up another 30%. So when you look at the US gold price versus the money supply, that ratio of the money supply to the gold price is like 4.6. In the 1980s, it was as low as 2.5. And the money printing's here, and it's coming back with a vengeance. So just against the money supply, the gold is actually not overpriced. The scary thing is, it's not that gold, again, is getting too expensive. It's that the dollar or the fiat money is getting that much more debased. And I think if you can understand that distinction, it'll help you look at this more objectively. That doesn't mean, though, if you're an average citizen who wants to protect yourself, well, buying an ounce of gold at 5,000 or 5,500, and we can talk about why it's going to go higher. Not in a straight line. It's going to go significantly higher. Frankly, Trump wants gold to go higher. Besant wants to go higher, and we'll talk about that. But again, the gold price isn't becoming higher. It's the paper money beneath it that's getting weaker. And the proof of this isn't just because guys like us in Switzerland understand this, not just because we have selling our book motive. No, we saw this decades ago. If you look at just the last few years, especially since 2022 when we weaponized the dollar, which was already getting weaker, that gold is more than just an asset to trade or go long or short or speculate on. It's becoming the de facto primary reserve asset. It's the new FX reserve currency. Now that may sound like an exaggeration, but the FX reserve currency globally is 40% US dollar and 35% gold. But the bigger picture proof of this isn't just gold bug analysis from Zurich. Since 2014, as I said, the US Treasury has been net sold and gold has been net bought. That was since 2014. When you fast forward to 2022, that gold stacking went up by 5x till today. So again, the amount of gold that central banks were buying and stacking should speak for itself. I am no fan of central banks, but you got to look what they're doing because they are the insider players in this rigged system. And if the central banks are stacking gold, that's like an army on your border, across your border, bringing more horses and cannons and gunpowder to your border. They're stacking for a reason. You've got to take that seriously. You have to look at boring things like the COMEX, which in New York is led by the Chicago Mercantile Exchange in Chicago. They've been price fixing gold and silver for decades, since the 70s. They wake up every morning at 8:30 at 5 or 6 banks. They put hundreds of billions of net short contracts to keep gold down. They can't do that in the same way. We can talk about it, but because there's 100% delivery of gold out of the COMEX in 2025. They can barely keep the gold in it, so they can't manipulate the price. And why is the gold leaving the COMEX? Because the counterparties, like JP Morgan or country X, Y, or Z, want that physical gold now more than they want paper contracts or paper claims on that gold. So when you look at the COMEX, you look what central banks are doing and have been doing, you look at the M2 money supply, and when you look at even commercial banks like Morgan Stanley finally recommending gold as an allocation after downplaying it for decades, if you look at even Goldman Sachs and JP Morgan has an 8,300 price target for gold in 2026. It's not the gold camp anymore. So if you look at what the banks, these insiders, these players are doing, rather than what anyone else is saying, including myself, they're stacking that gold for a reason. It all comes back because they know the world is shifting. That paper currency is no longer trusted. That dollar is no longer as trusted. And they're getting ready. They're loading their guns before combat. They're getting their lunch made before the picnic. They're putting on their jacket before we're in the snow. They're stacking their gold before this currency crisis becomes undeniable. And we can postpone that through wars and false CPI scales and platitudes from politicians. But if you watch what the central banks are doing, even the BIS, the mother of all central banks, with its criminal immunity, literally they've created criminal immunity for themselves in Basel. Even they have called gold a tier 1 asset. So watch what they do, not what they say. Gold is becoming that de facto strategic reserve asset. It is becoming that net settlement trade in the BRICS. It is becoming part of the global, not global new currency, but a global net settling net settling asset. So these are all evidence, again, that gold is becoming more than just a trade, or more than just a contrarian argument, or more than just an allocation, or more than just another type of asset. It's becoming central to a monetary system that's changing because our old monetary system is bankrupt.
Gold is shattering records in 2026, reaching a monumental milestone as it hit 55 all-time highs in US dollar terms over the past year. While skeptics argue we have reached peak gold, the objective data reveals a much more urgent story. The metal was recently up 60% compared to just 17% for the S&P, signaling a massive rotation into hard assets. This isn't just a simple price spike, it is a fundamental shift as the global money supply continues to expand and the melting ice cube of paper currency loses its purchasing power at an accelerating rate. Matthew Piepenburg explains that gold isn't actually becoming more expensive, but rather the fiat currency beneath it is being systematically debased. He highlights that central banks and major insiders like JP Morgan are aggressively stacking physical gold, treating it as the de facto primary reserve asset for a changing monetary system. By moving gold out of the COMEX and into strategic reserves, these players are preparing for an undeniable currency crisis. Let's get back to the interview to see why the truth is found in these objective numbers.
Reveals itself in war, and I don't think it's a massive coincidence that we're in a war right now, and all the signals about currency debasement, dollar destruction, all the indicators of that, we can get into more details, but the evidence is obvious now. It's no longer just a statement or a sensational gold bug thesis. The evidence is objective and empirical, and it's a massive tailwind for precious metals longer term. Doesn't mean that I'm saying gold and silver only go up and to the right. There's a lot of reasons whether there can be fluctuations, certainly manipulations of those markets, but in the long term, the direction for these anti-fiat assets like gold and silver were very obvious to me even in 2019 and are just being confirmed now. But again, it's not an arrogant statement that gold only goes up and to the right or silver only goes up and to the right. We know it doesn't, but at Von Greyerz, we think much longer term. We're preservationists, kind of boring, not the same guy I was in my 20s during the hedge fund days. Our motto is, our thesis is very simple. You save in an asset that stores value, like gold, and you spend for liquidity in fiat. Because if you're saving in a US Treasury or a European 10-year bond or a Japanese JGB, and you're going to lose. Or if you're saving in a currency that's a paper currency, you're going to lose. So a major allocation has to be made to a preservation asset that is an historical store of value rather than just a trend. And the trend now is clearly away from paper money and towards hard assets in general, and certainly gold in particular. And that's kind of what I was trying to say, both in rig to fail and gold matters. When you are in a desperate situation, when you're the home of the world reserve currency, and that reserve currency was weaponized in 2022 under the Biden administration, not even Trump, trust in that world reserve currency, whatever you think of, again, Zelensky or Putin, when you weaponize a neutral reserve asset like the world reserve currency or the world reserve, the dollar, when you weaponize that dollar, trust in that dollar faded dramatically. And central bank gold stacking's gone up 5x since 2022, literally. Central banks now hold more gold than they do US treasuries, literally. And so there's not a coincidence there. Trust in an already over-indebted US dollar was failing pre-22. When we weaponized that dollar post-22 or in March or February, the distrust for that dollar grew exponentially. Again, as evidenced by central bank stacking, and by just this undeniable rise in the theme of 2022 forward of de-dollarization, the M-Bridge, the BRICS pay, the 41 nations net settling their trades outside of the US dollar, moving away from the greenback, moving away from that sacred 10-year US Treasury, moving away from Uncle Sam's dollar. That was undeniable post-2022. What was equally undeniable was the petrosale, the petrodollar. This was a huge sponge for dollar demand since the early 1970s. Countries like Saudi Arabia, and certainly were looking outside of just the US dollar to sell some of their oil. China was always looking for a non-dollar energy solution. China was always looking to buy oil outside of the dollar. Iran, of course, was one of their bigger producers or providers of that oil, certainly Russia. So the oil is part of this narrative where we are. It's no coincidence that America finds itself in wars like Iraq or police actions in Venezuela or now a regime change in Iran. These are all oil-centric places and they matter to the dollar. So getting back to recent headlines in this particular war, Trump is desperate because our dollar is less demanded. You can't be a hegemony in the world if your dollar is weak. They're highly connected. Kissinger said you can't be a world reserve currency without a world reserve military. And you can't have your dollar be discredited or distrusted. But because of the debt levels in the US, 38 trillion in government debt, and because of the overissuance of US treasuries, and because we weaponized that dollar in 2022, the evidence is objective that there's been a move away from the dollar, in particular a move towards gold, which we can get into.
Gold has officially entered a banner phase, shattering previous resistance levels with 55 all-time highs in US dollar terms over the last year. While many observers claim we have reached peak gold, the data suggests the metal is just beginning to reflect the true extent of currency debasement, having recently outperformed the S&P by more than 3-to-1. This surge is not merely a retail trend. Central banks have increased their gold stacking by 5x since 2022, effectively replacing US treasuries with physical gold as a neutral reserve asset. This shift signals a massive global rotation away from paper money toward hard assets as the trust in debt-backed currencies continues to fade dramatically. The expert analysis in this session highlights that the rising gold price isn't because the metal is becoming more expensive, but because the paper currency beneath it is melting like an ice cube. True preservationists understand that the goal isn't to get rich quick through short-term trades, but to save in an asset that historically stores value while spending fiat for liquidity. With the M2 money supply having surged by 40% in just a few years, the ratio of money printing to the current gold price suggests the metal remains objectively underpriced compared to historical norms. Share your thoughts in the comment section below. If you found this market analysis valuable, please support the channel by liking this video and subscribing to more exclusive precious metals content. Thanks for watching.